Good morning, Lagos. Good morning, everyone. This is Ugodre, and I am the host of this show, Follow the Money, brought to you by Nairametrics. We do this every Monday, 8 to 8:30 on this radio station. All right, I'm here, of course, with the Nairametrics crew because you can always watch a playback of this anywhere, maybe particularly on our YouTube channel. If you want to watch again and see my face and the face of my guest, you can go to YouTube and then you can watch. There's a lot that happens in the studio here, so beyond just listening to the show, so you can always go back there and watch. And of course, if you want to stream any part of this show that you may have missed, you can always get it on any podcast platform, particularly Spotify or Apple Podcasts. Just search for Nairametrics, Follow the Money, and you get this particular episode and previous episodes on the show. And by the way, due to popular demand, I also do Follow the Money every day now. Well, almost every day. So just 10 minutes, 10-15 minutes nuggets where I also drop very, very important stuff, especially my stock picks. So if you missed out on my stock picks for last week, then you're probably missing out on something huge. That's all I have to say. But anyway, you can always go to Spotify, just search for the Metrics Podcast, and you get it. You gotta always listen to podcasts that create value for you, something that gives you money, or something that at least points you to money. And that is why this is called Follow the Money, because that's what we do. We just follow the money and then bring it up for you guys to chew on. All right, so today I have a special guest today. For a lot of his followers on social media and anywhere online, I'm sure they'll be excited to know that we have on the show today Finance by Mukhtar. My man Mukhtar, calling Finance by Mukhtar. Mukhtar, how are you?
Good. You know you're the boss. We follow you too. You're doing a fantastic job with Nairametrics. I mean, that's one of the best places to pick up.
Say that again.
Yeah. Because I'm an added fan of Nairametrics. Is they wake up in the morning, that's where to get the real news, market update, news, breaking news, especially.
See the kind of guest I like.
Real news.
See the kind of guest I like, and they just hype me.
No, I'm not hyping you. I'm serious.
I know.
I'm serious. I'm very serious.
Thank you so much.
Because you are not political about it. You say it the way it is.
Yes.
You see some news, you know that these are okay. Say it to them so that people will like you. But your news is always top notch. You don't care. You say the truth. That's just what I want to say. You say
Thank
the
you
truth.
for that, Mukhtar. Thank you. I appreciate it. All right. So we're going to be speaking to a number of issues today, particularly some of the public offers that you're hearing. Look, it's public offer period, and I'm sure a lot of you, our listeners, are being barraged by several advertisements on public offer. Buy this, buy that, promising this and that. But are these stocks good for you? Should you be investing in the stocks now or not? Or should you be careful? Are there things that maybe you're not seeing that some of us are seeing? Find out when I talk to Mukhtar in a few minutes. But before that, let's just do a little bit of a roundup for the week. So it was a bit of a bearish week last week for the stock market. Stock market declined by 0.4% in the last 2 weeks already. July is not looking too good for the stock market. And we've seen the market shed 334 billion in market value. That means investors in the stock market have lost 334 billion. Look, it does happen all the time. June was a bit like that, and then June ended up turned out positive. But July looks like there's a bit of struggle. Spoke to a few analysts and few portfolio investors, and what they tell me is that it's because of a lot of all the offers out there. There's just so much liquidity, and so investors are cycling in and out of stocks, and so you're going to have this bit of bearish pressure for a bit, but doesn't mean that there's no value out there, which is why you have to listen to Follow the Money daily, because what we try to do there is look for value in stocks that are probably cheap, and you may not know that they're cheap. And of course, you see those ones that are riding high and they're just what you call a bull trap. A bull trap is a stock that is going up, and then you think it's going up. It's an opportunity for you to get in, and then when you get in, you just end up losing money. So you want to be very careful about bull traps. But anyway, back to the stock market last week. So it was a bit of a bearish week. Nevertheless, you still have stocks that did pretty well. Veritas Capital Insurance, I don't know if you guys have heard of that, but it's an insurance company, and they were the top gainers last week. And then we also have Livestock Feed, which is an agro company. Most agro companies have been doing pretty well. There are three of them on the exchange that are the major agro companies: Livestock Feeds, Presco, and of course Okomo Oil. Livestock Feeds did 25% last week. So in case you're wondering, whether stocks are giving you positive returns, that is one stock that has done 25% in 1 week. Imagine 25% in 1 week. Whereas you can have investments at 25% for 1 year or 2 years. This is 1 week. And of course, Coronation Insurance also did 17.9% appreciation as well, and it's up 19.4% so far in July. Also, one of the major top gainers in July year to date was also ICO Insurance. ICO Insurance has done 17.9% in July as well. ICO is an insurance company, one of the oldest insurance company in the country, and has been steadfast. They had some challenges over the years, but it looks like they are working it out. I'm going to be looking at ICO Insurance later this week, so you might want to look out for that Follow the Money podcast, where we zero in on ICO Insurance and let's see what it is that they are doing and if there's an opportunity for us to get in time. And of course, Linkers Assurance. Insurance companies seem to be on a roll. They've been all, the top gainers this week, and that is getting me actually curious. What is happening in the insurance sector? Why are they all of a sudden posting positive gains this July? July seems to be quite good for insurance companies. The money seems to be flowing towards insurance this July. What is going on there? You might want to find out later this week, because we're going to zero in on insurance companies. What is driving it? Is it fundamentals? Are their numbers all of a sudden solid? Is there something we don't know that they know that we need to know and need to find out? I got to dig into that. And of course, you also have United Capital. United Capital, one of my favorite companies, by the way. The stock is up 17% in July alone, and is up 22.6% year to date. And of course, ABC, one of the oldest companies on the exchange, is a transport company. I used to be so fascinated about this stock back then. I always thought that it was one of those was one of those growth stocks that would just, keep growing and revolutionize the entire transport industry for Nigeria. You remember all those ABC coach buses that would just take you from here to Ghana, and take you around Nigeria, safe, well-trained drivers. You kind of just thought that this company would eventually metamorphose into something really remarkable as a transport company. But that really hasn't worked, has it? At least as a shareholder, that I was for some years, it didn't work until I had to dump the shares. I had to dump it because it wasn't doing anything for me. At some point, that stock was stuck. No pun intended. It was stuck at 50 kobo per share for years. Nothing, and just wasn't doing anything. Anyway, it's done. It's one of the best performing stocks so far this month. It's done 16.7% in July. I'm not swayed. I don't know if you're swayed. I'm not swayed. If you like, do 100%. I'm not swayed. Always looks like a bull trap for me. But if you want me to dig into ABC, I will dig into ABC. Let's find out what's going on there. Because here's one thing I've learned. It's not every stock that goes up that means that you have to go in. Sometimes when the stock goes up, you go out. You know what I mean? And sometimes when it goes down, you go in. So there's just no hard and fast. There's no clear-cut rule like that. You just have to follow the fundamentals and follow your instincts as well before you determine what you want to buy. But anyway, topping order number 10 was Red Star Express. Red Star Express, so far in July, it's done 15.1%. That is another penny stock on the exchange. I'm sure a lot of these names you've heard are not names that you're very familiar with. That's the funny thing with the NJ. You just hear names that you wonder where are they from. You don't know where they're from. But Red Star Express is a logistics company. It's been on the exchange for years now. And they often also deliver good numbers fundamentally. Maybe not a very sizable company in terms of, revenue size, but they've been pretty much consistent. The stock might also a little bit difficult to find. It doesn't have a lot of liquidity like that. But I think that it's one stock that has, pretty much done well in a way over the years. All right, so that's basically the stock market major gainers and losers last week. Or in July. And as I mentioned, we're going to go right into the main gist for today. When we're back, Finance with Mukhtar is in studio.
You're listening to Follow the Money with Ugo Dre.
All right, yes, you're listening to Follow the Money with me, Ugo Dre, on Classic FM 97.3. We do this every Monday, 8 to 8:30, live in studio. There's also a video version of this that you can stream on our YouTube after the show. And, of course, you can listen to this on any podcast platform. Before I go to Mukhtar, yesterday there was news that broke that kind of surprised everyone. Africa's richest man, confirmed that our dear NNPC no longer owns 20% of Dangote Refinery. It's now 7.2%. What is going on in this country? Anyway, but the biggest news or the biggest cheer for me of every Dangote news that has come out the whole of last week was him confirming that Dangote Refinery is going to list on the exchange before the first quarter of 2025. In fact, he actually said the plan was to list it this year, but it's not going to go beyond the first quarter of 2025. So that is going to be one mega listing, trust me. Because according to the projection that I saw, that company is bound to do $25 billion in revenue next year, or maybe 2026. He did say 2025, but let's even give him 2026. So if a company is going to do revenue of $25 billion, which is about 30 trillion naira in 1 year, how much do you think that stock is going to be valued at? Because today, the most capitalized stock on the exchange, that's the most valuable stock on the exchange, is Dangote Cement, and it's valued at just over 11 trillion naira. So this one is likely going to be valued at over. I don't want to put a valuation to it before they go and give us that valuation, because the cheaper the stock is, the better for us, man. But anyway, looking forward to that. It's going to be really exciting. He said he's going to list the refinery side as the chemical side and the fertilizer side. I don't know if it's going to be separate listing or it's going to be just one company listed. I would prefer separate listing, because I just have a problem with companies that are too bogus. When you just have too many things inside you, like they're just too big. It's always difficult to find value. And that takes me to my first question to you, Mukhtar. Access Bank right issue. It's up now. We came up last week, and interestingly, Access Bank is doing all-in right issue based on one new share for every 2 share held. That's at June 7th, 19.75 naira per share. Mukhtar, Access Bank.
Well, I think that bank have come a long way.
Okay.
I mean, I just remembered yesterday that at a point during the last public offer, recapitalization, Access Bank was 2 naira. At that time, I remember that time, then they had to merge with some banks, and today, they're selling at 19 naira, 19 naira, 30 kobo, 19 naira,
70 kobo per share.
That's what they are doing in the private, the right issue. Well, a lot of people have a lot of issues with it. You look at that price, then you look at what is selling on the exchange today. Does it add value? I think they still have one of the best stock to buy. I still think there's a lot of value in Access Bank. If you look at their PE ratio, they seems to be the cheapest now. If you look at their earning per share, which for me excites me. Sometimes people talk about the profit, talk about the PE. I don't get excited about that, because I, as an investor, I'm beginning to look at how much is coming to me. It's not how much of the profit can I be able to share from. And you look at the profit, earning per share of 17 naira 40 kobo, and that is almost the same price like what they are, almost the same price what you are buying the share with. So,
in fact, it's actually 19 naira 59 kobo, trailing 12 months. That if you look at the last quarter.
So I think it is a very, very, very good stock to have. But now it depends. Like I said, if you look at it, if you're joining Access Bank 1 year from today, you bought it 1 year, maybe a year ago, you say you're making just 3.something%. If you look at beginning of the year today, you say you're making a negative of about minus 16.73%. Like Ugo, they say when the stocks are down is the best time to buy them. So that gives value for designing investors, because that's a very good stock, especially if you are not on the right issue. If you are not qualified, because the right is only for existing shareholders. Then again, you look at 2 years of about 106% in terms of
return.
Yeah, return. Then again, you look at 3 years, about 116%. So it's a good stock, all the same. But again, you look at their strategy. And that's what people are not really looking at. You're looking at their strategy. What are they doing? Everybody talk about Access Bank, the banking sector. They are not looking at the PSM. And being a pension fund administrator, that of recent they've gotten ARM, which is the second largest pension fund administrator in Nigeria outside IBDC. And when you look at that numbers now, you compare it to Access Pension put together, you realize that they might just be the number one pension company in Nigeria. If you look at the time they came here, I think they have about 16.something% ARM, and the IBTC was 23.something%. And when you add access to it, then you just get that it's a good company.
I hear you, Mukhtar. I mean, we did do our own deep dive on Access Bank. I think it was in my last podcast. I mean, I have my own views as well, mostly positive. But nevertheless, Mukhtar, people have also said, look, this bank it's actually big, the largest bank in Nigeria. But is it really sweating its assets enough? Is it really giving shareholders the sort of value that they expect? I mean, you've spoken to how cheap it is at 19 naira 70 kobo, which is very close to its current trailing 12 months earnings per share, which is basically a price to earnings ratio of just 1, or if not less than 1. So pretty cheap. But then that in itself is a challenge. So why is it so cheap? Why are we not seeing value? What's the point holding on to a stock that has all these nice things you've said? Oh, good numbers, great numbers. He has pension fund. He has this. He has that. He has all sorts of wants to acquire all the banks in Africa. But hey, what does it mean for a shareholder? Are we going to see share price appreciation? At what point do we say to the MD, CEO, or whoever is running the bank, what is your KPI for shareholders? Are you going to give us solid returns? We're seeing good dividend yield currently, and likely dividend yield could be better. But in terms of share price appreciation, we're not seeing anything.
Exactly. I think that's a big challenge. If you look at, like you said, you look at the numbers, profit and everything, you look at the share price. I saw your, listen to what you said about Access Bank, follow you the what time you did in Aramatic, take away from Access Bank and all that. I saw everything. And I think the biggest challenge again with Access has been the price movement. But then again, you could also give them credit that maybe it's a stock that market determine movement, not a stock that the owners try to move it to get investors. So you must give it. That's what I say is the positive about the right issue. All of the right issues, Ugo, you and I know before the right comes, you see the price moving. And then it's stopped at a point. They make you feel that you are buying it, you are buying at a discount. But you and I know that when the right settles, the price will definitely settle. But I think what they're looking at is the potentiality of market perception determining the price of assets. And I totally agree with you again. In terms of dividend payout that excite Nigerian investors, assets have been very, very conservative. You know, until recently, they were able to give, I think, if you look at it, about 2 naira, 20 kobo. They've been very conservative in their dividend payout. They say they think about the expansion and keep telling shareholders that they will begin to enjoy it. So hopefully this expansion thing of all around Africa, you know, one of the banks had a dig on them in the exchange during their expand. When will this expansion stop?
And that's the point. I mean, to Muta's point, if you look at dividend payout ratio, 2019 for Access Bank, 25%, 2020, 27%, 2021, 45%, 2022, 35%. Last year, 12%. Of course, that was because of the sort of profits they did last year. And so, on an average, 5-year average, you're looking at dividend payout ratio of 29%. So it kind of looks like the company keeps most of the profits to itself.
Too much.
But then, when you look at return, apart from last year, 2023, return on average equity for Access Bank, 2019, 15, just sub 16% between 2019 and 2021. 2021 was when they even did close to 18%. 2022, maybe just under 14%. And last year is probably their best year yet, with about 33%. Of course, we all know why that happened.
We all know why that happened.
And that's the point. So value-wise, kind of looks like the struggle. But then, like Mukhtar has said, looks like in terms of dividend yield, might be a good opportunity somewhere in there. Just to close on Access, currently trading at 19 naira 10 kobo, a huge discount to the right issue price of 19 naira 75 kobo. Buy, sell, or hold for you?
I think buy.
Buy for you.
Buy.
Okay. We've got some positive there. One buy for Access Bank for Mukhtar. All right, so we go into GT. GT has also made an announcement for a share offer. And I think theirs is a mixture of it's a hybrid of a right issue. I think it's a public offer. For GT Bank. What's your take on GT Bank's public offer?
Well, one bank that has even investor perception of GT is very, very high. We've seen them grow from GT Bank to GTCO. Now they are expanding and doing a lot. I think last a year before this, I think GTCO has not been very fantastic when you look at the numbers compared to previous years. They said this was due to their expansion into a holding structure. We've not seen the holding structure bringing value yet to GTCO. It still remains the bank that is largely driving that company for now. So when you look at that and then you look at the price as we're selling, because a lot of people have a challenge with the price at 44 naira 50 kobo for the public offer. Everybody tend to look at, wow, that looks so expensive. Then in terms of potentials of growth compared to others of his contemporary that might be coming out, they think it's very expensive. I personally think yes, but again, in terms of value they've created for investors, they've done well. But again, I'm still studying the numbers of GTCO to know whether it's a good buy.
Let me give you some numbers of GTCO.
Okay, good.
I mean, that's why we're in Nairametrics. We have these numbers. So GTB currently the most valuable stock on the exchange.
Yeah.
First of all, one of the only two stocks that is valued at over 1 trillion naira. And so over the years, you've seen their earnings per share go from 6 naira 96 kobo to 19 naira last year. But of course, in between that period, there hasn't been that much growth. Growth has been a bit stunted because of some of the challenges that you kind of mentioned. For example, 2020 was 7 naira, and then it dipped in 2021 to 6 naira 14, and then went up in 2020, dipped again in 2022 before last year's growth. But in terms of dividend as well, dividend payout ratio has always averaged 40%, for GT Bank, except for last year when they did 17, of course, because of the FX gains. So in general, value-wise, yes, at 2.5x.
2.5x price to earnings ratio. Share price is currently lower than their offer. Their share price was slightly higher than their offer price when it came out. So they are selling. Their own right issue is at a discount compared to Access Bank, which is at a premium. It's a premium to the offer. But we had Segun Agbaje come out last week to say that the bank was looking at doing $1 billion. They wanted to be the first Nigerian bank to do $1 billion in profit, and that he's hell-bent that they're probably going to do that very soon. Half year already, they came out with a record Q1 profits. Never been seen profits before. I think it was over 400 billion or so in profits in Q1. Based on those numbers, do you think that there's value in here for shareholders? Or
there is. It's, like you said, it's the most valuable country, and investors' perception of GTCO is very, very high because, like your track record, like you just pointed out. But again, like you said, over the years, certainly fantastic. Sometimes they have to go into their retail earning to be able to pay shareholders the kind of shares that they have. Dividend they have to pay, and that's why it's better when you have retail earnings. And then you just go on the 19 naira 71 kobo their earning per share.
Okay, for GTCO,
yes,
yeah.
And then you have another bank that is coming in, and its earning per share is 17 naira. and then you look at the price.
So your point is that GT Bank and Access have similar earnings per share, but GT Bank is more valuable. And that's the point. So investors, so how come investors think GT Bank is more valuable than Access Bank, even though? Do you think it's perception?
It's perception,
or is it about
this
the sort of return? Because if I give you returns, for example, returns on equity in 2022. GT Bank was doing 19%.
Yeah.
In 2021, 25%. In 2020, 27%. In 2019, 29%.
That's what I said. That's why I say perception. Investors.
So that's not perception. That is fundamental.
Fundamentals. But what drive fundamentals?
Perception? No, performance.
Performance. But then performance can be relative. Let me give you an instance. It's between me and you now. If I'm buying GT at 45 naira. Let me say I'm buying it at 44 naira 50 kobo.
Yeah.
What is the probability that I will get GT at 60 naira in the next 1 year? And what is the probability that I will get Access at 30 naira in the next 1 year? Which probability is higher?
Depends on the investor, isn't it?
So
buy, sell, or hold for
you. For me, I think in terms of when you're looking at a company that have strong fundamentals, good management team all the way around, I think it's still a good buy.
All right, so we have two buys locked in here from Mukhtar. This is looking like a very good Monday for these banks, at least from the follow the money perspective. Yes, there is, he does have a little bit of concerns here and there, but the point here is that looks like a pretty good locked in investment.
Long time.
All right, good. Interestingly, those are two stocks in my portfolio. Anyways, so we go right into the third stock. We're tight with time, so we've got to run this quickly. Fidelity Bank was straight out of the block as the first bank to come out with an offer. I think it's about 10 naira or thereabout in terms of what their price is.
9 naira.
Yeah, pretty tier 2 bank that has been around for a bit, has a bit of stable management for some years now. Succession plan has sort of worked out very well for that bank, and it looks like the major challenge for them now is how to get into that tier 1 space with the kind of capital raise that they're looking to do.
Exactly.
So what's your take so far on Fidelity Bank? And
I think it's one stock that has really moved the market. I mean, from a stock that paid 5 kobo, the stock that paid 10 kobo, the stock that will now pay interim dividend of 20 kobo, to a management team that came in and that stock was a penny stock. And today you can't say Fidelity is a penny stock. And with the kind of resolve and with the kind of strategy, their strategy is SME driven. And especially they target a particular region of Nigeria and really try to build business from that space. For me, I think that's a fantastic bank to have on your portfolio. Again, then you look at their buying of Union Bank, United Kingdom. You see that again, they see value also there. For me, it's one of the cheapest stocks that could easily, in the shortest possible time, maybe within the next 1 to 2 years, become a tier 1 bank. But again, what are their strategy going forward? When, like you say, when this fund comes in, we will see them acquiring more banks. They are just sitting down now, trying to be. I think they are doing the regional. I mean, they are even national. They are not even look. I don't think they have so much branches other than the UK branch. They don't have branches scattered around Africa also. So for me, I think it's a good stock.
All right. So I mean, hearing you looks like Fidelity is a growth stock. You see it as a growth stock.
You see, it has so much growth
opportunity. There's a lot of potential.
Too much potential.
Interesting. So, I mean, for sake of time, we'll end buy, sell, or hold for you, Fidelity Bank.
Of course, I want to buy.
Another buy.
What
is going on today, man? We've got 3 buys locked in. Fidelity, GT, and Access Bank. Oh, my God. Anyway, that's it. You had Mukhtar's views. I have my own views, of course. I mean, if you listen to previous versions of this podcast, you get my own views on the stock. And of course, everything we say here is just our personal opinion. Always make sure you do your own research. DYOR, that's the word, do your own research. You always got to do that all the time because there's so much that goes into deciding whether you want to buy a stock or not. All right, thank you very much. We do this every Monday, 8 to 8:30 on Classic FM 97.3. This has been Follow the Money, brought to you by Nairametrics. And check for any of our podcast platforms or previous versions or any parts of this show that you may have missed. Next week, we're going to be talking more stocks. FCMB on my radar. Zenith Bank on my radar. I will touch on them this week, so look out for my podcast. Do have a profitable week ahead.